Hello and welcome to Inderes TV. Today I'm in the studio with Analyst Sauli Vilén to discuss Sampo. Hi Sauli.
Hey.
So, in your Q3 update, you wrote that the excellent in terms of numbers, but could you open up a bit about the Q3 report?
Well, yeah. The growth was really good, especially on the private side, both Nordics and then the UK. Then the combined ratio or the underwriting result was once again excellent due to the good market conditions, but also due to Sampo's own operational excellence, so to speak. So yeah, I mean, what's not to like in that sense on the operational side. Then if you look at the investment income, which is the one which fluctuates a lot during the quarters, the investment income was really high because of the fact that one of the Sampo's old private equity investments they made in, I think, 2018 or so, the Nova listed during the quarter, and of course during the listing Sampo sold some of its shares, and then the share price went up notably, so the rest of the position actually, the valuation went up. So in that sense, the investment income was clearly higher than it normally is. But yeah, overall, there is hard to find any weaknesses on that report.
And what were the drivers behind the growth?
Well, as I said, the consumer business, or how Sampo itself calls it, the private business in the Nordics and in the UK. If you think about what drives the growth there, obviously, in the UK, it's both price and especially on the higher market share. But in the Nordics, it's mainly still price hike driven. Of course, there might be some small market share gains, but the main driver is still the price hikes in the Nordics.
Okay. The new CEO emphasizes growth. Previously, maybe profitability has always come first. What do you think about this new growth approach?
Yeah, it was actually really interested to see, since historically Sampo has been like notoriously focused on profitability. Their DNA has always been that you want to protect the profitability at all costs, that you can actually you are willing to lose market share in order to protect the strong underwriting result, you know. And it has, I think, like the way back they said something like that it's that the sure thing to lose money in P&C insurance business is to drive relentless growth, basically, which is actually true. But yeah, but of course, what the new CEO, who has been with Sampo, by the way, a really long time, has been the CEO of If during the past 5 years or so. So he said that they of course will be like profit-driven companies still, so they are not sacrificing their profitability in order to drive growth. But I guess the point here is that Sampo really believes that their digital capabilities actually give them a competitive edge over the competitors, which I actually agree. Sampo has invested a lot on that field. They have been a front runner in that field, and it now pays off. And because of that competitive edge, they actually believe that they can actually drive more growth, which basically would mean that they would, once the price hikes eventually fade, then it would mean increased market share. Yeah. In that sense, yeah. But yeah, it was a flashy headline, yes, about the growth. But in that sense, the DNA has not changed, of course. So yeah.
Yeah,
but
yeah, no need to worry about profitability.
No need to worry.
Yeah.
But then again, it's also, I think it's actually a good thing to look things out of a new perspective also, since of course it would be, from the shareholders' point of view, it would be fantastic if Sampo could systematically get market shares in the Nordic, especially in the private field, without sacrificing profitability. That would highlight the fact that they would actually have strong competitive advantage over their peers. So let's see how this pans out in the upcoming years.
Yeah. And as expected, the company announced a 150 million euro share buyback program.
Yeah.
what are your thoughts on that? I mean, it's business as usual.
Yeah, it's in their capital allocation playbook. Nothing major here. Just to remind how the capital allocation playbook works in Sampo, they have this the dividend is they want to keep the payout ratio close to 70%, which is their minimum target, and they want to grow dividend annually. I have said that the dividend is kind of a sacred thing, so they want to avoid the situation where they would need to cut dividends. So they want to raise it gradually. They don't want to make any major hikes which could put them in the difficult spot and later. They want to grow dividend gradually and play it safe, so to speak. And then on what they do with the rest of the capital, since obviously they don't need much for the business itself. They only have very limited needs in the business itself. Rest will be used in buybacks, basically. And of course, when there is these OP investments I mentioned, the Nova, and then there's the Nexi, when they eventually be divested, then of course they will also be used at the buyback. So buybacks are part of their capital allocation toolbox, and investors should get used to it that Sampo will do annual buybacks. Basically, the buybacks will be running fairly constantly from here till for a long time. So
yeah, so it's just a normal part.
Just a normal part. Yeah.
Capital allocation. Yeah. In our Q3 interview with CFO Knut Alsaker, he said that Nordic customers really like Sampo and they're very loyal to the company. What is this based on? Why do you think people like Sampo so much?
Well, I'm pretty sure the customers actually like if not Sampo, but I can be wrong here. But yeah. In the Nordics overall, the customer satisfaction levels are really high, and of course, if is also they are in superior level there also, and it's overall customers, because of that, customers are actually super loyal. Why is that? Well, one thing is that in the Nordics, in the insurance business, you actually get a really good service. If something happens to you, you will make a claim. You will actually get the money. You don't have to fight with the insurance company what actually happens. You will get the money very, very easily. You know, it's a short process, etc. So you get the service what you actually need. This is not the case in many other countries. Example in the UK where Sampo operates, it's a way different market there. But that's one thing. So well, when you get the service you actually ordered, that's kind of a good thing in a customer perspective. Another thing is that the market dynamic is very different in the Nordics. For some reason, that for example, price comparison websites haven't really made big in the Nordics. For example, again, if you compare in the UK, which is kind of a good contrast for the Nordic markets, the price comparison websites are the key channel actually there, and people are constantly looking at how the price looking at the prices are constantly switching providers, going after the lowest price, etc. And in Nordics it's not about that. But once in a while that is something that kind of puzzles me, that why Nordic customers are not like are so loyal, since obviously this is all, especially during the period when the inflation has been higher, and the insurance inflation, the price inflation has been really high. Insurance prices have gone through the roof, so to speak. So in that sense, I would have assumed that people would try to save money and maybe more try to find cheaper options, etc. But that hasn't happened. So there is also some. So I guess it talks about the good service and also the different market dynamic here.
Yeah, that's probably very true, because especially on the insurance side, I'm always surprised by people who maybe move house, buy a new car, whatever. And if you say, "Did you compete your insurance?" They never do. They're like, "No."
Yeah. That's what it's not in our DNA, and it might be because insurance companies don't let you down. which is kind of a good thing to be honest. And of course, with Sampo's case, it's actually, of course, a really good thing since, of course, that the customer retention rates are insanely high. So it's actually a really good foundation to build your business in.
True. Well, Sampo's performance seems to be really on a solid ground. But are there any risks in your view that investors should be aware of?
Yeah, I think the solid ground is kind of an understatement. What Sampo is actually doing at this stage. Sampo, I mean, I have been following Sampo like as an analyst for 15 years, and still Sampo constantly can surprise me that how well they actually can perform and how much they still can improve. But yeah, what are the risks? Well, I think one clear risk is that the market starts to extrapolate the growth from the past years, which has been strongly driven by the inflation and price hikes. That cannot last forever, of course. Eventually, the insurance prices will stabilize to the level of the normal inflation. It's still running above the normal inflation, but eventually they need to match, right? And then we are in the situation that the insurance market in the Nordics, it's not growing much. It's a slow growth market. Obviously, you know, the market penetration for those products is really, really high, etc. So there is the growth is slow. So there is a risk that market extrapolates on that, or at least if the market starts to expect too high growth, then it would require Sampo to make a major market share gains, which is not easy in this business. You have, even though Sampo is an excellent player here, you still have a tough competitors here. And then I think another risk which I have been saying for years is that there is a chance that market might not be this rational. There would be more competition, so to speak. Basically, at some point when we are in the situation where a lot of the insurance players are earning sky high returns on their capital, at some point some players might think that, hey, now it's a good idea to rock the boat. Let's try to compete more with the prices, etc. Right. And that hasn't happened during, well, it didn't happen during this when the interest rates were rock bottom, but that kind of makes sense since nobody wanted to rock the boat. When the interest rates went up, then I thought now it's a bigger risk, but it didn't happen. But it still can happen. There is a competition. It's in the market. It's not a monopoly market or it's not a cardinal market. So yeah, it could happen definitely. That's something. What I want to point out here is that if there would be so-called price war, or at least more intense price competition in some of the Sampo's market. Sampo operates in 4 main markets, right, in all the big Nordic countries. So in that sense, like if in, for example, Finland there would be a major price competition, it would only affect that part. I don't see a situation where all the 4 Nordic markets would be in this at the same time. So in that sense, Sampo is also in a good position that if there would be more pressure on the one side, the three parts would still be fine. But yeah, those are the two things. There is, to be honest, not much, no any like super large risk with Sampo. Sampo is one of the most low risky stocks in the whole Helsinki Stock Exchange, to be honest.
Yeah. Okay. And then finally, the valuation and recommendation. What's the position now?
The position is that this stock is fairly priced. The valuation, it's high, but it is high because it should be, since Sampo, if the viewers have noticed, the excellent company what we have discussed here, but the price fully reflects that basically, and thereby it's hard to see any upside on the case, and basically what the investor is currently getting is just a dividend yield, and it's not enough, even though Sampo is an excellent company, and it over the long term, still the market price fully reflects us. So that's why we have a reduced recommendation.
Okay, thank you so much. So Sampo, an excellent company with a fair but high valuation. You can read more at inderes.se, and there you also find a link to our discussion forum if you have questions for Sauli about the company.